what happens if you have something breaking out like that Tesla, breaking out intraday and breaking out on the daily, the weekly, the monthly? How do you handle that? Are you getting bigger and taking advantage of having all those players on your side? And that's where, when you identify these trends properly, you can really start to take advantage and apply it into your trading with these rules. So this is a great chart. This is Avigo. Well, I guess Broadcom used to be Avigo, AVGO, and this was just May 26th. This stock exploded as part of the NVIDIA earnings explosion on the AI guide. And a lot of people on FinTwit were fighting this stock. This was its second huge day in a row. But what we find here is this was steady as she can go, right? So we were talking about the slope. If I were to do a best fit line, this slope is very, very steady, right? And at no point do we get away from it. I have this simple moving average. We're just hugging this thing the whole day. There's no reason to be short this thing while it's holding above these trends. And again, my one exception would be if it capitulates to the upside, but I don't see that anywhere. We don't have any crazy volume spikes. We don't have any crazy price spikes where things just really whoosh higher. We start to get a little bit off the moving average towards the end of the day, but really nothing to get me interested. So that's how you avoid a rip. That's how you stay with the winner. And that stuff adds up big time. And now I'm going to give you an example of no man's land. This was in IEP, the Icon Holding Co., May 25th. This stock was obviously getting beat to crap on the Hindenburg report. And so the way I look at this stock is essentially off the open. We made a down leg. We try to put in some type of a bottom and kind of stall out. And so what we'll see is at this point, we aren't making lows here. We try to make highs. We don't get anywhere. So a lot of people, if you're taking in kind of this blue circle, if you're shorting in here, that's going to be a bad idea, but just because you're still in the range, right? So I don't want to short anywhere in this blue circle. I really want to wait for it to break this bottom yellow line because now we're in a new price range. Now we're starting a new trend. And so all of this is what I would call consolidation. If I am going to play anything, I might consider a long out of that range. If you take these, you don't really end up in too much trouble. But again, at least in my view, shorting in here, while kind of this counter trend is attempting to bounce, those are going to end up being very low probability and probably take away from the trades where it does consolidate, then break later. So my second challenge for you all, make a list of rules to follow based on whether a stock is trending or range bound. I gave you a couple examples of real ones I use, especially not taking anything counter to the trend unless it capitulates. And then, of course, you define capitulation and everything else. Stuff like that is really game changing to your trading.